Good afternoon, ladies and gentlemen. My name is Lukman, Senior Research Analyst at FXTM. I want to welcome everybody to FXTM's Week Ahead Market Themes to Watch Out For. Now, before we proceed, I'd just like to confirm if everybody can see my shared screen and can also hear me clearly. Please, I'd like to see a show of e-hands for anyone and everyone who could see my screen and also hear me clearly. Thank you. Excellent, great. So before we move to the fun stuff, I'd just like to share a quick disclaimer, then we'll sink our teeth into the week ahead and what to expect in the first full trading week of 2021. So the content presented comprises of personal opinions and should not be construed as trading or investment advice. Trading forex and leverage financial instruments involves significant risk and can result in a loss of your invested capital. You should not invest more than you can afford to lose and should ensure that you fully understand the risks involved. Trading is risky at all times. Okay, so for those who are new to the FXTM's week ahead, what we do is we have a quick review of the markets in the previous week. We look at the economic calendar, break down the key themes to watch out for in the week ahead. Then after, there'll be a technical and fundamental setup section with everything we've discussed, and this will be concluded with a Q&A session at the end. But at any time during the presentation, please be free to ask me if I'm going too quickly or any market related questions. I'll be more than happy to answer any questions anybody has in regards to what to watch out for in the week ahead. Before we proceed, I'd just like to wish everybody a happy new year. You know, we made it. 2020 was a year defined by extraordinary levels of uncertainty, unprecedented events, periods of euphoria, chaos created by COVID-19. But near the end of the year, we saw a sense of hope thanks to this vaccine-related optimism and the stimulus bill that we're going to talk about later during the presentation. But we're in 2021, a new year, new opportunities. I'm very excited. I hope you guys are excited as well to see what markets really have in store for us. And for those of you who look at stock markets, if you look at Asian stocks, European stocks, and US futures, it looks like so far so good. This is a week filled with optimism, positive expectations, and hope. Stock markets in Europe and Asia, apologies, I mean, stock markets pushed higher last week after US President Donald Trump actually officially signed off that 900 billion fiscal stimulus package. Funny enough, despite criticizing the bill just last week. So this was the main thing that really triggered what we call that Santa Claus rally. The S&P 500 actually ended 2020 over 16% higher. So, this was quite good because when we look at the gravity of the fiscal stimulus, it actually, after many months of failed negotiations in regards to this, the US economy finally got that critical lifeline needed to keep the wheels running as COVID-19 continued to spread its poisonous tentacles. But on the positive side, though, the fact that the vaccine is being rolled out, there is some light at the end of the tunnel. So, as I said, if 2020 was a year defined by a lot of uncertainty, I think so far so good. 2021 could be a year of renewed hope and a return to normality. Last week as well in the UK, we had that Brexit breakthrough before Christmas. Now the UK actually has officially left the EU Single Market and Custom Union on 31st December, 11 p.m. Okay, so it only took 3 prime ministers, 2 general elections, and repeated deadlines for this 4-year-long Brexit saga to come to an end, and there's still some sense of positivity. But the devil's in the detail. While the trade agreement will allow tariff-free trade between the UK and EU, I think many crucial issues still remain unsolved. So all this unanswered questions may result in Brexit still flashing the headlines in 2021. So although the Brexit saga has come to an end, there could be a spin-off sometime in Q1. Let's see how that plays out. Looking at currencies, it was the same story with the dollar. The dollar was beaten black and blue by G10 currencies. It actually concluded 2020 almost 7% lower. Really, really tough year for the dollar. Looking at commodities as well, we're going to speak about commodities later on. Gold has been really, really interesting. But just a quick review of last week. The Santa rally was fueled by the stimulus breakthrough. The vaccine rollout raised hopes for the global economic outlook for 2020. UK officially leaves the EU single market and custom union after over 4.5 years of drama and uncertainty, and the dollar descends deeper and deeper into the abyss. Does anybody have any questions in regards to what we discussed with the markets, reviewing the markets last week, before we proceed to the next slide? Okay, so the economic calendar for the week ahead. Look, we have the ISM manufacturing PMI from the US in December. A key data point that could really impact sentiment towards the US economy. Don't miss out the ADP employment change on Wednesday. FOMC minutes, which may create some volatility in the dollar, as it offers some insight into the Fed's monetary policy path for 2021. Another ISM services PMI from the US on Thursday, and more heavy data, retail sales and consumer prices from Europe. But I think the main course and the possible market shaker could be the US jobs report on Friday. This is going to be the first US jobs report for 2021, so it could set the tone. Yes, it's calculating, it's showing the job growth, the job figures for December, but normally from the fact that it's the first US jobs report for 2021, it could come with a special touch. Just to recap again, a lot's happening this week, from the ISM manufacturing PMI to the ADP employment change and heavy data from Europe. But the main course and a potential market shaker could be that US jobs report on Friday. So what to watch out for in the week ahead? So there's already been a positive start to the trading week, and on top of this positivity, we've got some key things to really watch out for this week. And the first one on the list, of course, is the OPEC meeting. So we've got a quite important OPEC supply decision, which will most likely influence oil's near-term outlook this week. Remember, after the cartel have collectively decided to raise oil production by 500,000 barrels a day in January. Now, this meeting will be important because they'll decide whether to raise oil production by 500,000 in February. Russia has already supported another increase in the same amount in February. But, we have to keep in mind, well, if you look at oil's positive performance over the past few weeks, oil has drawn ample support from the, fiscal hopes, optimism over the world economy recovering, essentially boosting demand for oil. But I think it'll be interesting to see how rising production from OPEC really impacts the upside, because at the end of the day, when we look at oil prices, it's been the supply side and the demand side. On the supply side, they've been OPEC has been doing all it can to really try to normalize or stabilize the oil markets by limiting production. But the demand side was really heavily influenced by COVID-19 and the lockdown restrictions. The next few days may be wild for oil, depending on what or how the OPEC meeting later today concludes. On Tuesday, on a more political front, we have Georgia's Senate runoff elections, and this will be quite critical for not only the US dollar, but may have profound impacts on Joe Biden's presidency. Now, in a nutshell, if Democrats win 2 of the Senate seats, this could result in a lot more stimulus being injected into the US economy, While this is good news for the US economy as it results, in more money flooding in, offering that critical lifeline to keep the largest economy in the world running, more stimulus may result in rising inflationary pressures, something that could result in more pain for the greenback. Now, guys, if you look at the dollar is already in the dumps. So, the outcome for tomorrow could result in more pain for the dollar, which has been already depreciated against every single G10 currency. On Friday, we have the US jobs report. Just recapping quickly, uh, if the jobs report exceeds market expectations, this could be a welcome development for the US economy, but may raise some questions whether more fiscal measures are needed to support economic growth. It'll be really interesting to see what the first US jobs report, the for 2020 has to offer, and impacts it may have on a dollar, sentiment towards the US economy, and of course, stock markets. Looking at commodities and currencies, I think we should pay a very close eye on the dollar and gold. Already, I'm going to load my charts later today, but the dollar index has already stumbled into 2021 under renewed selling pressure due to that positive market mood, the fact that stimulus is rolling through the U.S. economy, and there's speculations of rising inflationary pressures. So all of these things are really, really hitting the dollar hard, and we know that the dollar is inversely correlated to gold. So when the dollar tends to weaken, gold appreciates, and this is exactly what we're seeing. So despite the positive market mood, the fact that dollar is weakening, this is actually pushing gold prices higher. So just to recap again, OPEC supply decision, Georgia state runoff election results, US jobs report on Friday, and dollar and gold. Does anybody have any questions in regards to what we've discussed and to watch out for in the week ahead? Please ask away. Okay, before we break down the technical setups to watch out for, I'm seeing one or two messages that you can't see the shared screen. So I just want to confirm again, could everyone see the shared screen and hear me clearly? I would like to see a show of e-hands before we proceed. Okay, perfect. So I've got four technical setups to watch out for this week. But guys, please, uh, if you have any questions and currency pairs or commodities or indexes outside of the four that we're discussing, this will be an excellent opportunity to ask away. So the first is euro dollar eyes 123, pound US dollar to extend gains, S&P 500 challenge 3800 all-time high. Gold remains bullish. So I'm sharing my MT4 chart right now. So everyone should actually see my MT4 chart with the euro dollar on a daily time frame loaded. So the question, euro dollar to challenge 123. If we look at prices right now, actually, during this webinar, actually over the past hour, euro dollar has actually smashed into that 123 resistance level, and this has been resistance for an extended period of time. Actually, zooming out to the weekly, the last time the euro dollar was able to truly conquer 123 was back in 2018, April 2018, almost 3 years ago. Okay, so on a weekly time frame, the euro dollar is firmly bullish. Same thing on a daily time frame, and we'll be looking for a solid daily close above 123. What could power the euro dollar higher? Well, if we have positive economic data from Europe, a weakening dollar. These two factors are enough to really instill euro dollar bulls with enough inspiration to target that 123 and beyond. If 123 proves to be a firm, reliable, and stubborn resistance level, euro dollar may descend back to 121,750 and 121,000 respectively. Now, I've got a couple of lagging indicators here, the Bollinger Bands, moving averages, and the MACD. These are all lagging indicators. So a lagging indicator is an indicator that, directs you to the right trend. And all these lagging indicators are suggesting that the euro dollar has further upside to go. The MACD points to the upside. Prices are trading above the 50 simple moving average. And yes, there was a rejection here, but the euro dollar is hugging the outer skins of the Bollinger Bands. So we'll be looking for a solid daily close above 123 to open a path higher over the next few days or even weeks. Okay. The next technical setup that we were discussing was the pound US dollar. Now, I have been watching the pound US dollar like a hawk over the past few weeks due to Brexit, but now, as we said, the UK has officially officially left the EU after securing a Brexit deal before Christmas. What next? Well, right now, what's really powering the pound US dollar is a weaker dollar, but I think moving forward, as more questions are unearthed over that Brexit deal and fears start to rise over the UK economy heading towards a double dip recession, this may haunt investor attraction towards sterling. Right now, though, looking at technicals, prices are struggling to keep above that 13630 level. A breakdown below this point could open our path back towards 134820 and possibly lower at 1.330. But if a weaker dollar is enough to really keep the pound US dollar elevated around that 13630 level, pound US dollar, which is already firmly bullish on the weekly charts, may have enough juice to push towards 13750, which is over 100 pips away. I mean, looking more at indicators, prices are trading above the 100 and 200 simple moving average, while the MACD also crosses to the upside. The pound US dollar is expecting a weekly bullish channel, which reinforces that bullish bias that we have towards the currency. So right now, the technicals are pointing to further upside, people, but the fundamentals may easily spoil the party. Let's see how things play out over the next few weeks. S&P 500. S&P 500 is firmly bullish. It doesn't come more bullish than this. There have been consistently higher highs and higher lows. Prices are trading above the 20 simple moving average. The MACD is also pushed to the upside. Futures are pointing to a higher open today. What the real things that are powering the S&P 500 higher is that fiscal deal breakthrough, that we saw last year. Also, the vaccine rollout that is fueling optimism over the global economy, and this sense of hope that is really turbocharging that risk on sentiment. So there's been consistently higher highs and higher lows, and the S&P 500 has the potential to test that 3800 level if this positivity rolls out through the week. And gold. So look at gold. Just look at this. What a strong way to start 2020. Gold prices have jumped almost $30. Prices are trading above the 50, 100, and 200 simple moving average. The MACD's crossed to the upside. Okay, yes, the RSI is going to 70, which is saying that this is overbought, but it's fundamentals that are driving gold prices higher, people. And the fundamentals are in favor of bulls. A strong daily close above 1930 could open a path towards 1965 and possibly higher over the next few weeks. For gold to push lower, probably if there's sustained weakness back below 1930, this could open a path towards 1906 and that psychological 1900 level. Okay. This is the recap again. Euro dollar eyes 123, pound US dollar to extend gains. We've already covered the key levels. SP to challenge 3800, and gold remains bullish. So, in a nutshell, people, before I start to answer your questions, this has been a positive start to 2021. The vaccine rollout and the fact that that fiscal stimulus bill was passed before the end of the 2020 has raised hopes over the global economic outlook. This is translating to that risk on mood, which is pushing equity markets higher. The dollar is weakening because it's seen as a prime destination of safety, but it's also weakening because expectations that inflation could rise in the US is weakening the purchasing power of the dollar. Now, yes, the positive market mood is meant to weaken gold, but gold is inversely correlated to the dollar, and as the dollar weakens, gold is pushing higher. Key themes for you guys to watch out for in the week ahead. Of course, we've got the OPEC meeting and OPEC output decision later today. On Tuesday, that Georgia state runoff election results, something that could have profound impacts on Joe Biden's presidency and the dollar's outlook. Don't overlook the US ADP data on Wednesday, and of course, the all important US jobs report on Friday. So, this is a big week and it may set the tone for January and probably even the rest of Q1. Let's see how things play out. Now, let me answer your questions. So, I've got a question from Sunday, Opusman. Sunday's asking, how can I use economic calendar to trade the Forex? So let me first direct you to where you can find the economic calendar on the FXTM website. So that's the first step. So I've shared my screen again. So this is the FXTM main website. So to find the economic calendar, you simply go to market analysis and economic calendar. And this economic calendar is right here. So the economic calendar focuses on the fundamentals, and I can talk about this for hours, but to simply answer your question, the fundamentals could impact the currency. If economic data, depending on economic data from the UK or EU, let's for example use the United States. This week we have the US jobs report or any other important economic data from the United States. Depending on how the data comes out, this could influence the outlook for the economy and the currency. If the data is positive, this is good for the economy and tends to strengthen the currency. If the data is negative, this is bad for the economy and tends to weaken the currency. But yeah, moving forward, if you want to check the economic calendar, just simply go on the FXTM's website and click on the economic calendar. Thank you. We've got a question from Jason. Jason's asking about the dollar yen. Okay, wow, the dollar yen. So Jason wants to know where the dollar yen will conclude by the end of this week and whether surging COVID cases will result in the yen appreciating, which will impact the dollar yen. I think for this, let me load my chart. Let me load the chart of the dollar yen. So I've got a bare chart of the naked, a naked chart of the dollar yen. When I say naked chart, I mean there are no indicators. There's no technical lagging indicators. This is just purely based on price action. So here's the dollar yen, and right here. So as you can see, the dollar yen is bearish on daily charts. They've been consistently lower lows and lower highs. I can even draw a bearish channel right here, and prices are trading within this bearish channel. What is driving the dollar yen lower? Well, of course, a broadly weaker dollar. That's the primary driver driving the dollar yen lower. Secondly, we have to keep in mind that there's still a mixture of themes across the year that is pulling and tugging at sentiment. Even though there is a sense of positivity based on the vaccine rollouts and that fiscal stimulus bill being passed, surging coronavirus cases across the world is still fostering a sense of caution. And this caution is still feeding or stimulating appetite for safe haven assets, including the Japanese yen. So we have a case where we have a weaker dollar and the Japanese yen, and this is really supporting the downside. Levels to look out for this week. Well, prices are already trading below that 103 support level. I think I'll be looking for a solid daily close below 103 to open a path lower towards 1205.30. If we have a case where 103 proves to be solid or reliable support, the dollar yen may bounce back towards that next key level of interest around, reload it, 103.840, which is actually the recent lower high. Okay. We've got another question from a lot of questions today, and I wish I could really answer them all, but our time is short. We've got another question from sorry, apologies guys, let me just load it up. From from Stitch Clover, in regards to the pound. Okay, let me quickly just go over it again. So, for those who are paying very close attention to the 4-year-long Brexit saga, it officially came to an end on December 24th when the UK and EU were able to have a breakthrough before Christmas. Now, right now, the UK has officially left the EU. It was officiated on December the 31st at 11 p.m. But many questions still remain unanswered. And given this, even though the Brexit saga has come to an end, there could be a spin-off sometime in 2021, especially if these questions, result in investor attraction towards the pound being hit or is really impacting the UK economic outlook. But looking at the technicals though, even though the pound US dollar is in an uptrend, prices are struggling to keep above that 13630 level. A daily close below this point may open a path towards 13482 and 1330. But if this level is conquered and prices are able to maintain or keep above this level this week, the next key level for the pound US dollar will be found around 13750. Okay, guys, it's been incredibly fun talking markets with you guys, but fear not, I'll be back in 2 weeks' time. I just want to share the disclaimer before with you again, all of you again, before sharing where you can find our work or how you can reach out to us. So just another Again, the content presented today compromises of personal opinions and should not be construed as trading or investment advice. Trading forex and leverage financial instruments involve significant risk and can result in a loss of your invested capital. You should not invest more than you can afford to lose and ensure that you fully understand the risks involved. Trading is risky at all times. But guys, in light of this, please follow us on Facebook. FXTM, you just type FXTM on Facebook. On Twitter, my Twitter handle is @Lukman_FXTM. If you have any questions in regards to the markets, please be free to reach out for me through this medium. You can also follow us on LinkedIn, Instagram, and YouTube. Every Mondays, I do my week in 60 seconds, in which I break down what to expect the week in 60 seconds. So a more compressed version of this 30-minute webinar. Please be free to check it out on our YouTube page. So I'll see you guys. We're gonna have our monthly market outlook exactly 1 week from today. So please be free to guys sign up to that, and we're gonna have a more broader outlook of certain assets, certain themes, currencies, and also for those who love my week in 60 seconds, sign up to the next one in 2 weeks' time. Okay, all. Wishing you all a happy new year, happy trading, keep safe, and see you all next week or in 2 weeks' time. Thank you all.